Good afternoon and good evening, ladies and gentlemen out there. Welcome back to Walk the Block, Navigating Digital Finance, where we're all trying to navigate those stormy crypto seas all together. But it's a big week and a big show here for you today. We got the Federal Reserve meeting on Wednesday and Thursday, I do believe. So we will have some press conference highlights probably next week as we talk about what Jerome Powell was saying in that. Outside of that, though, tonight we're going to be talking about the Coinbase CEO is saying that crypto is going to swallow up all of finance. So more on that later, as well as ETF updates, looking at some just good metrics and also the possibility of understanding why the Grayscale ETF continues to dominate, despite they're the ones that were doing all the initial dumping. So questions to ask, questions to be answered. We'll get to it. And at the end of the show, we're going to be giving you a new look into how you can get more content here that you know and love, and get it more frequently and better stuff even. So that is what we got going on. I am your host for the evening, Zenith. I am joined by my excellent cast of characters tonight. We have Agent J. How you doing, buddy?
I am doing excellent. Had a fantastic weekend of sales. Started off the week really well. I got a whole bunch of work today, and then I actually hopped on a little bit earlier to do a short market update for the gang, going over both the bullish and the bearish scenario. So if time permits, we're going to go a little bit of a rehash here at Walk the Block because we do have some updated scenarios. But other than that, man, I am pretty much looking forward to what's going to happen for the remainder of this week. Like you mentioned earlier, we got the FOMC meeting earlier, a little bit later on Wednesday, I believe, is the date. So I think the market has already pretty much priced in that we're not going to get a rate cut. We're going to hold steady at 425, 450. CME, Kalshi, Poly Market all predict that like high to mid 90s that we're going to hold it. So I think that's pretty much accepted by the markets already. So really, what we're going to be closely listening to is how Jerome Powell speaks post his spiel during the beginning of the meeting, talking about his dual mandate. And aside from that, I think we got some more labor market data coming in this week as well. So not as much high impact news as we had last week, but certainly there's always room for more volatility in crypto, because if Donald Trump opens his mouth, probably going to throw up some more volatility from there as well. But other than that, man, it's been a great start to the week. How about you, Dace? Good to see you, sir. How you been doing?
Likewise, sir. Also keeping busy. You know, I sadly wasn't on stream this morning. I was on a job site. Booked some more work while I was there. That's always good. But I did also post a short calendar in Degen Roundtable. Come follow us on Telegram, on Walk the Block. Later on, we'll talk about that. Come follow us. We post updates all the time, right? We're here 24/7, posting updates, keeping people informed on what's coming down the calendar as we go through. And so, yeah, like you said, there's going to be some interesting stuff this week. The 7th is a big day. That's a day that I sort of based all of my post dates around. And so the next, even just 48 hours could be quite interesting. Tracker, how are you, sir?
Doing well, guys. Always look forward to Monday. Excited about this one in particular, which we'll get into. Yeah, Jay, every time you seem to be streaming, either I'm pulled away or I can't get in. It's been a difficult week this week, so I've not been happy about that whatsoever.
No worries, gang.
But been watching the replays and the reviews that you guys have on there. Been pretty good stuff. Interesting. I mean, basically you got that. I mean, I'm just going to sum it up. I think, Jay, I mean, we got that fifth wave, and then you had the correction after the fifth wave, right?
Mm-hmm.
So it's like textbook.
TLDR.
I mean, it's been textbook since we've had the run up. So the TA has been spot on. Like you always do, you do the bullish and bearish scenario. So we always, like you do a good job laying it out. And I think all the other data that we all provide here as well to support those thesis on the levels seems to be coming to fruition pretty well. And it's tough when you have a macro environment when you don't know, it's so headline driven. You don't know what the day is going to unfold. But it's interesting that the technicals and those support levels and all those various lines that people think is just Fugazi all seems to come to fruition. So it's interesting.
Yeah. There you go. Well said. Before we get into it, gentlemen, I would be remiss if I did not give a shout out to RH Max, who is right now actually hosting the Hex Cuatro Cinco web seminar or webinar over there. We just finished up day one, had over 9,000 live viewers, Happy to see so many people showing up, showing out, and sending love all over there. I think he gave out about 4 million pulse today, doing a little bit of games halfway through the show, and I think he might have a little more teed up for tomorrow. So that's going to be going on over on the RH Max channel from 1 p.m. to 7 p.m. Eastern time. If you're interested in all that stuff, go check it out. Did a legal panel with a good buddy of mine, Nuclear Herbs, and a newcomer for us, Hex Mad Dog. We had a good time talking about Richard Hart case wrap up, talking about the crypto landscape for 2025. And we even teased a little bit about how to set up a private trust to find legal ways to not pay all those capital gains taxes. But yeah, shout out to the boys. That's what we got. Outside of that, though, let's get into our first article of the evening. We have coming to us from Bitcoin.com news. Coinbase doubles down. The CEO says crypto will eat most of the financial services. Crypto is set to devour traditional finance as Coinbase sharpens its focus on decentralized systems, driving a seismic shift in how global financial services are built. Brian Armstrong, CEO of the crypto exchange, reinforced the company's long-term vision for the industry on May 2nd, stating on his social media platform X, "Our thesis, crypto is going to eat most of the financial services, and Coinbase is 100% focused on crypto." His remarks came as Coinbase rolled out a series of updates across its lending services, particularly involving USDC loans and Bitcoin-backed credit products. Max Brownsberg, head of consumer products at Coinbase, revealed on X that adoption of USDC-based loans through the decentralized lending protocol Morpho Labs is accelerating. He said loan volume rose sharply to $120 million in May, up $45 million from April, and up $14 million from March, and up $2 million from February, and none in January. Brownsberg noted that only $265 million in Bitcoin is currently being used as collateral, while over 100 times more remains idle, indicating what he sees as a substantial untapped potential. Coinbase announced on April 30th that its Bitcoin-backed loan service is now fully available to all U.S. users except those in the state of New York. Armstrong weighed in on the recent milestones and echoed Brownsberg's optimism of the trajectory of crypto lending. In response to the loan update, he stated, quote, "Credit makers are moving on chain. We eventually want to power more small business loans, home loans, car loans, uncollateralized loans, etc. Many people in the world don't have access to credit. We can make it more efficient and global market on chain." While the rapid expansion of crypto-backed lending services underscores a broader trend towards decentralized finance, some critics argue that these platforms still face regulatory uncertainty and systemic risk. However, proponents assert that the on-chain model offers a transformative path forward, potentially democratizing access to credit on a global scale. There you go. Sounds like the lending is only getting stronger over there, and they sound very optimistic that it's going to start overtaking some of those main financial services. Do you guys think that's actually going to happen in the near future, or is this more of an extended timeline, do you think?
What's the classic saying, Zenith, is you look at the incentives, right? When we look at who owns MetaMask, when we look at who is major investors in Ethereum, when we look at organizations like Circle, right, owns and operates USDC, and who owns those folks, like I think that this is where this is going. I've mentioned this, especially since the ETH ETF. I've had this hypothesis that banking is going to be more efficiently done in the eyes of the bankers on Ethereum chain because of its yield potential. It's why the yield features were shot down for the ETFs, or delayed, let's say, and they're still working on getting them passed. I believe that there's another deadline coming up. I haven't followed that as close as I need to. But I know that they're still in process of pushing that over the finish line as a feature for the Ethereum ETF. There's a reason why that was delayed, and I think that you're going to see a wide array of financial institutions, both old and new guard, make use of this sort of most efficient new capital allocation, in my mind, as it pertains to offering yield-based products to consumers without some of the constraints, let's say, that fiat sort of puts on the process of things. That's my take.
Yep. 100% completely agree. I think yield-bearing products are one of the most popular financial products that you have available for most traditional investors. I mean, even banks have yield-bearing products like certificates of deposits. So I think that's definitely going to give a a nice bridge, a gateway, if you will, between folks who are still on the fence about investing and the folks who are already in here. So yield bearing products are definitely going to be super popular. I know you mentioned Ethereum, but a ton of different companies are now trying to identify how to use Bitcoin as well, right? Because traditionally we've never had Bitcoin yield bearing products, and now a ton of companies are also jumping onto that avenue. We've spoken about stable coins extensively. I think, in my personal opinion, that the next level of worldwide next level of massive adoption is going to come from the use of stable coins, especially as that's adopted as a form of payment between retail investors and retail in general, like small businesses, big businesses, uh, uh, and like brick and mortar mom and pop shops, for example. And then
Well,
finally, I think
you can pass on the local level tax payments in that form as well.
mhm. Obviously, using blockchain technology allows things to become a lot more streamlined. There's a lot less paperwork involved, so there's that part that's also attractive. The less accounting you have to do, the better. And then finally, when real world assets become much more, when we finally transition to the phase of, instead of just the meme coins and the coin of the day, to actual utility, like a utility based altcoin run, I think the real world asset sector is going to provide a lot of traditional investors an avenue to throw some money at. Because let's face it, if you like investing in money markets, well, once the money markets transition onto the blockchain, then now you've given traditional investors something that mirrors one for one something that they've already valued in the traditional space. Now it's available over here on the blockchain. So I don't necessarily think that crypto is going to take over in the sense that most crypto natives think that it will. I think the technology will, but I think it's going to be more from the technology and less about individual crypto assets. Aside from the big ones, obviously, like Bitcoin and Ethereum, etc. Unfortunately, meme coin number 2,595 is not going to go anywhere. Sorry.
No,
Yeah.
I agree. I think I do think that stable coins are going to be the future, and I think, like you've said, there's a adoption level, a comfort level for what's 7%, right? 7% is the number of folks that are invested in crypto today. And so to get people more comfortable making that move and transition, having those traditional stratified structures of, I send to this banking people, or I send, you're sending to the same entity, right? But through their processes, you're participating in a way that feels familiar. I think that that's going to be a big selling point for banks. Sorry, Z, go ahead.
Yeah.
Oh, I was just going to say, I think Jay's correct there, which is that meme coin number 472 will never be a actual asset to be used in these types of loans. I think that traditional finance might start shifting towards these, as I'm sure the CEO, Brian Armstrong over there, is very, very positive outlook on how he believes that these kinds of loans are going to make more sense in the future. But I think it's going to mirror something that we've seen this cycle, which is that this is largely the ETF cycle when it comes to crypto. And I think that what we're seeing is that traditional finance is willing to dip a toe. They're not willing to dip much more else into that. And the reason, or I guess the effect of that rather, is that we've seen really Bitcoin as the big winner this time around, because that's where a lot of the money is going. Granted, we do have that Ethereum ETF, but at the same time, though, on any given day and on average, the Bitcoin ETF does 10x the volume and value of the Ethereum ETF. So if you ask me where I think the future of these loans is going towards, I think it's either stable coins, which should be allegedly the next most stable thing in crypto right after Bitcoin. But even then, Bitcoin is still seen as a very highly volatile asset, especially considering the traditional finance side of the house, where risk management is really the name of the game of how those people try to build their portfolios and their strategies. So the way I see it is it's probably going to go Bitcoin, stables, and then we might start getting into like some other really like blue chip kind of things like Ethereum, Solana, XRP, if it can solidify itself inside of the United States. Stuff like that is where I see the future of this going. But as it stands right now, this is a rather large prediction from Brian Armstrong. But at the same time, I do think there is some merit to it. The timeline, that's the big question here. We've talked in the past about how there have actually been partially Bitcoin collateralized loans that have actually gone to completion. But at the same time, those were prototypes, those were tests, those were very, very early on. So you mentioned it. There was what, 9% of people in crypto right now?
I want to say 7 is the number I read.
7? Okay. So if that's the case, we're still very, very early in the adoption phase. And when it comes to things such as like maybe a house loan or even a car loan to make it smaller, but still that's a substantial amount of money for the average American. Stuff like that, it's going to require a level of stability and trust on part of the consumer and the lender. So I think until we start to see a little bit more adoption from the overall customer base of these kind of products, I think it might not be as coming as quickly as we'd like. But at the same time, we are seeing successful tests for these things, which in my mind, that makes it extremely plausible.
Well, I mean, just even you brought up the example of the real estate market. Even just creating the house, the smart contract for that particular agreement between the buyer and the seller, create the smart contract. So now you've taken out the middleman, and now instead of having to go through a real estate broker, now the buyer and the seller can conduct themselves explicitly on the blockchain. I think when a lot more people become aware of the possibilities that's available to them, when you become crypto native, when you become DeFi native, that's when the light bulb moment's going to happen. Because everybody likes having less barriers to entry. Everybody likes being able to save money. Everybody likes the speed at which to transact. All just with the real estate example, you've taken out the middleman, so you're still probably going to have to pay the taxes. You're going to have to pay the tax man, but you're not going to have to pay a real estate broker to do that for you. The speed at which those things can settle, even on Ethereum, it's pretty fast. And just the time that you save. So I think at the end of the day, the adoption is going to come. People just have to be open and much more willing to understand the capabilities that a smart contract, for example, provides you. But again, it's like something that's going to come along the line, right? I think the easiest in for people is to be able to use stable coins, right? Because the easier something is to understand, the higher the probabilities that you're going to be able to onboard people to that particular avenue. And then you start exposing them to the other stuff. Like once somebody who is familiar with using stable coins to pay for their bills, to pay for their taxes, and they're familiar with the application that they're using it, then you could throw something a little bit more complicated at them. But I think that is the end, right? If it's not Bitcoin, if it's not the ETFs, it's going to be through stable coins, right? That's going to be the end. It's like the easiest thing to understand.
I agree. You know, there's a funny relationship here that came to mind, Zenith, when you were talking about the perceptions of the ETF and their relative value against each other, Bitcoin and Ethereum. There was a long period of time where the Bitcoin futures ETF was live and the spot ETF was not. And that was generally considered not very bullish for Bitcoin. Now we're in a spot where we have the Ethereum ETF, but not staking. And it's kind of it feels like a similar situation, even though the spot is approved, its core functionality, right? So it tells me that the market thinks the core function of BTC is holding its spot, right? And the core function of Ethereum is not simply holding its spot. Like, I know it's a very elementary argument, and you could make counter arguments, but when you look at the behavior during the periods of time these assets have existed in these in traditional finance and whatever permutations they have, it's interesting to see how they interact and how the coin. How the market reacts to the coin's offering and the boundaries around that offering, I suppose.
Your idea of the different arguments for Bitcoin and Ethereum do make sense. At the same time, though, I think there is a bit of a great irony there, which is that if the idea of Bitcoin is to be solid value, then hopefully you should stake it or place it there long term and get yield on it, as opposed to Ethereum if you're hoping for more price appreciation there. But at the same time, I can understand the sentiment of saying that Bitcoin, we want to buy spot and hold. That appears to be the point at which the market is really congregated. And then Ethereum looks for that new functionality, which, I mean, time, which is that Bitcoin is becoming digital gold. Ethereum is becoming an actual smart contract place where you can actually execute these different protocols, smart contracts, whatever you want to do with it.
I agree. And that's why I would say that, like, even though the spot ETF is live, all of its functions aren't online. Like, you're not seeing what Ethereum can do held in those sort of traditional finance hands, because not all of what it's able to do is live for those people that would only hold it through the ETF, right? Big institutions that they're gonna utilize those yield bearing protocols and the ways to use Ethereum smart contract features. Um, they don't have a lot of reason to buy it right now. It's only going down. Like, I'll wait and buy it cheaper until you guys let me do what I want to do with it, right? So, something to think about.
The thing that I found interesting about the article was, I mean, Coinbase CEO, I mean, shots fired, right? He's basically, really out there telling them that we're going to basically disrupt the entire financial institution. And why would he not think that? He's got the entire U.S. government behind him. Coinbase has now been deemed the central exchange of the U.S. Yes, there's Kraken and others, but Coinbase has got all the partnerships, got all the deals. They're the ones that are buying all the crypto off market and helping supply a lot of these ETFs on the spots. So yeah, they've got all the backing and support. They are now the Google of finance. That's how I'm treating them as. So let's think of what has happened up into this point. We had Fed now, regulations gotten friendly. The FDIC has now told banks you can own crypto. Stable coins are now seem to be it's definitely the new financial thing on TradFi, and they're licking their chops on it. The thing that would just scare me is, like, it is programmable money. So you can program the smart contracts to do as you see fit. We'll see if that gets abused, or if they stay in line and not try to get too out of control with it. So that's something we got to keep a close eye on. And then now on top of it, large tech companies have started migrating away from necessarily cloud infrastructure development. Now they're trying to go over to crypto infrastructure development. Google, Amazon, a lot of these companies are starting to switch over to that, building the infrastructure. JP Morgan, they already have their JPM coin, which is a stable coin. They have that. Citibank, they have their digital asset platform that they've built. Fidelity's been probably ahead of the curve over anybody. Fidelity's been buying crypto up since 2013, 2014, something crazy like that. So all these institutions are all migrating toward it. And then what has the banks done? You go into a bank and ask them, talk to them about any of this stuff, they just gloss over it. They have no clue about what's going on at all. They're just down doing their they're just doing their jobs, but they don't know what's going on with regulation. They don't know what's happening. Hell, we're more closely aligned to what's happening there than they are. So it's going to be the banks that are slow are going to get gobbled up. I think you're having a major disruption, and just like any new infrastructure, not infrastructure, but new disrupting type technology, this is going to be a disrupting technology. It's going to be interesting to see who comes out on top. Coinbase will definitely come out on top unless they somehow really piss some people off. Now, if it was truly a free market, I could see banks going absolutely under. They could get gobbled up right now by other companies that are starting up that would basically take a large market share. But the U.S. government's not going to allow the big companies to get disrupted on that. But yeah, it's going to be interesting. I think the companies that were able to leverage this, like we've talked about, and leverage the harness real world problems and leveraging cryptography or crypto digital assets with the programmable contracts, and be able to apply that, are going to be the ones that are going to get out the start quick. And then it's going to come down to, are they going to be allowed to run as fast as they were able to go? Or are they going to get pulled back by the government to say, okay, let me reel you in a little bit? It'll be interesting to see if that happens next. But I know, Jay, you've been all over about Aerodrome Finance. Of course, they partner with Coinbase, and they're sitting right there. And that's going to probably be the back of the whole yielding aspect of Coinbase and other central exchanges. I don't know. The only thing is, like, I don't know if Coinbase is going to be the only one. Do we think Coinbase is going to be deemed this is the central hub for the US, or are they going to allow Kraken to have a little bit of this, or other central exchanges? Is it going to be almost a monopoly?
I think Coinbase has a very good argument for it, considering they really are kind of the first and best dressed when it comes to being that sort of centralized hub, considering that they are the custodian for a bunch of those ETFs, including the BlackRock one. So it makes sense to me that that's really where everything is driving at this point. Granted, I know that a lot of us DeFi native folks are not thrilled about the idea of centralization for crypto, but that might be a different argument. As it stands for the normies and the average consumer getting into it, having a one-stop shop, I think it's a reassuring thing. But at the same time, big believer over here that competition drives innovation. So I am, for one, am looking forward to competition.
Yeah, I
Right.
agree. You know, they've got Tether globally to compete with, but in terms of in US, crypto.com has lots of political inroads, makes lots of high profile endorsements. You know, I'm sure that they will have something to say about Brian's
Yeah, they
project.
will.
We'll see.
That's a good point, Dace. Yeah, because I mean, Crypto.com, heck, they've done tons of marketing. So yeah, they're probably been the biggest marketers out there. I mean, Super Bowl commercials. They owned, didn't they own the Miami Heat dome and down in Miami? They had Crypto.com, or was that LA? The
Maybe
I want to
Staples
so.
say
Center.
they
Staples
own
Center.
one of them for sure, but another one for crypto.com is shoot. I'm a UFC fan. I've been seeing those
Mm.
crypto.com ads since like
Yep.
2020, 2021.
Mm-hmm.
So they've got some serious inroads with the UFC, which is a massive, massive entertainment corporation right now. And they seem to, their stock is only going up as far as I can tell. So inroads like that make sense. But at the same time, if you can get Super Bowl ads, that's also something different. But there was another exchange that had a Super Bowl ad a while back. You guys remember which one that was? It was FTX for the folks at home who don't remember that one.
Yeah. The largest rug in crypto.
Yeah. So here's why I want to pitch it to you guys. Here's why I brought this article up and why I think it's actually valuable. You could very easily look at this and just be like, yeah, oh yeah, it's the CEO of a company just trying to hype up his own stuff and try to promote their own holdings and make a good sales pitch. But one of the things for me is that they actually provided some numbers in there showing that, look, there's a substantial amount of traffic. It's like what, $256 million of Bitcoin is utilized currently for collateralized loans through them. That is no small chunk of change. And at the same time, I think this actually ties in nicely with the real world assets episode that we did previously. Talking about that episode, if you remember, was when we were talking about how a lot of things are going to be moving on blockchain, utilizing smart contracts, utilizing the blockchain as like permanent storage forever, effectively. I think that this is a similar vein to that, which is that it's more things that are lining up all in the same direction, which makes those trends more plausible. Do you guys think this is just a hype piece, or do you think that this might be the case?
Well, I think it is the
Yeah, I
case.
don't-
Just a matter of time.
Yeah.
It's just a matter of time. I think the more progress we can make within this the tail end of this 4-year cycle, and then up until Donald Trump leaves office, right? Assuming that we don't have another crypto forward conservative president to take his spot, the more progress we can make within this the next 1 to 2 years, the better setup we're going to be moving forward in order to expedite that adoption. I think it's just going to be a matter of time. It's just a matter of time.
The
Right.
funny
At
part about
first-
it is, sorry, finish your thought, Jay. Sorry.
I was just going to say the way that crypto is being adopted reminds me of this. I forgot what the name of the Japanese tree was, but this Japanese tree spends like decades digging its roots into the soil. And then suddenly it's like a massive tree within a few years or so. So you're spending decades digging your root system into the soil and nobody thinks anything of you. And then suddenly it all comes at once. And I think that's crypto adoption.
I would say true, because this article for all of us is like, yeah, duh, this is a no-brainer. This is just, I mean, we all see it coming, but you talk to the average person out there, and they may have heard of Bitcoin, they probably heard of Doge, but they don't know anything about this because this is not being shared. Is 60 Minutes doing an article on this? Is anybody else doing big articles that the mainstream people are watching? Hell no, they're not watching any of this. So if something is so revolutionary, it's changing so dramatically, like this root, like the analogy Jay said, with this root system being embedded, why are they not sharing this to the public more to explain kind of where we're going with this and how it's going to can potentially disrupt the entire world with, especially with smart contracts and potential ETFs and that technology? But once the infrastructure is in place, now sky's the limit. You can do everything. That's kind of like, when before we had Bluetooth and Wi-Fi or a global network, you couldn't do anything. Once you have that infrastructure, now you can just you can just build things off that all day long, and that's what you're going to probably start to see, something similar to that. New apps coming out, new features, things leveraging it, but yet nobody seems to be talking about it. And if
I have
you try
a
to bring it up, you look at you like you're crazy. You're like, oh man, whatever. Like
I have a low resolution answer for you, Track. One's less gracious than the other. One is that they're just malicious. A lot of people speculate that, look, the reason why very few larger entities are talking about it, and the reason why entities like BlackRock took such a long time before they started talking about it is because they wanted to fill their bags first. So that's kind of the malicious take. The more gracious take is that most of these people are just ignorant, and so they're not going to try and speak on something that they don't understand. It's mirroring what happened when the internet first came out, or even going further back. Right? When cell phones came out, everybody was like, "Why would I use a cell phone? I'll just write letters like usual." And then when email came out with the internet, they're like, "Well, why am I going to email? I'll just call." Why am I going to use a smartphone? I have email and I have my telephone. I have a desktop. Why am I going to use a computer on like this tiny computer?
Humans are
why am I?
infinitely curious and terrified of change all at the same time.
Yeah, like why am I going to use like what's this Facebook? Why am I going to use Facebook? I got MySpace. It's a repetitive pattern.
I hear
People
you
are
on
comfortable, right? People are comfortable with things that they're familiar with, and it takes a significant period of time. I think the period of time is shortening because I think people are becoming much more adapted to the speed at which technology is generally growing and being adopted. So I think that lag period is severely decreasing. It's not going to take us 50 years to adopt crypto, right? But the pattern is pretty much holding, right? People are uncomfortable with something new, and really it is only the pioneers that are out there on the bleeding edge, getting business done, and that's why we're gonna reap most of the benefits.
It's
Right.
because it's
And
money.
but
Money already breeds comfort, right? And so when it comes
Yeah.
to your money, you're not. That's gonna be you're like, I'm more interested to go download this new app about my social life than I am to go experiment with my financial life with technology, right? That's gonna be most people's take.
It was funny though. I was watching a Saturday Night Live episode, which I don't ever do because they pretty much suck now. But anyhow, I watched one, and it was done well. John Hamm was on. It was a nice little bit. It was on the news, and they were talking about what they think that the market's going up, and what's yields and bonds. Who the hell knows about any of this stuff? You know, it's almost like it's encouraged to not care about all this boring stuff more and more for the masses because that's true. If you keep everybody in the dark, I mean, you can kind of do as you see fit and reap the rewards on it. But it's almost encouraged to be ignorant on these things, and it's not as complicated as people think. It's really not. A lot of times, it's just a terminology problem. They like to throw a lot of terminologies and label things. The same thing in technology. They do the same stupid stuff, and it just confuses the masses. So that's why we're here.
Well, I was gonna say that's why our first shows look like they do, because it was such a big deal that this new administration has this totally new stance on crypto, right? I mean, you asked the question like, why aren't people talking about it? I was going to back Jay's former and more malicious answer and say for the same reason that they're legislating through enforcement. Like, you look at the actions, right? And so I think those things are probably connected or were connected. Thankfully, that's changing right now.
So when we get the 60 Minutes episode telling us how this is going to change the world, that's going to be the top, right?
Yeah, that's the top signal right there. It's already in. It's too late. Sorry, got to go find the next thing. Now, to Tracker and Days, you guys both had good points there, which is to Tracker's point. I think that this is more of a cultural topic, but I think that there is a weird trend of people being apathetic to this kind of stuff. And it's almost like ignorance is bliss, or almost it's more socially acceptable to be ignorant on these topics, because if other people don't know about it, then you trying to know about it is almost just like wasted effort. And then today's, I think what you're talking about as well, which is that when it comes to finance, that's for the average person, that's a more serious or risk on kind of discussion, which is something that should be taken very seriously. And if anything, it's probably, I think a lot of folks thinks that it's probably best not to challenge established traditional norms when it comes to the way about thinking about money, like whether you just go to a job, earn money, have like a 401k, some maybe a little extra savings on the side, then hope that your tax return every year can pay for the family vacation, that kind of stuff. So I think that those two attitudes can definitely be driving forces for the pattern that we've seen up to this point, which is that there hasn't been a ton of adoption when it comes to cryptocurrency, A, because it's a new risky type of investment, and B, because it's been largely, I think there's a bit of a stigma that's still attached to it. I think it's definitely coming around now, as we've gotten traditional finance into the space. But I mean, shoot, like last cycle, people talking about like the Bored Apes Yacht Club NFTs and all the random meme coins, Shiba Inu doing a million X or whatever. It's like, yeah, that stuff, it turns people away from the serious financial aspects of it.
No, I agree. And I think, again, to circle back, not to sound like a broken record. Meanwhile, you can't. The ETH staking ETF is not passed, right?
Not yet, baby. Not yet.
Those are your real financial instruments, right? That's Ethereum in its full form in a mainstream financial environment in my mind. And so, yeah, no, it's no wonder that and I don't want to. I was going to be really spicy.
we won't belabor the point. We've already. Yep. I think we've beaten this one up pretty good.
A big difference in today's administration's approach, right? You can see that in their actions.
Very true. Gentlemen, any final thoughts on this before we transition? Once, twice. All right, sold. Well, we are going to be switching it over and talking about the Federal Reserve. But first, do you want to give some shout outs to the people out in the audience? We got our good friend Centurion 54X saying, "What's up, amigos? Good to see you, my man." Jemmy coming in here as well saying, "Happy Monday, gents." Happy Monday to you as well. Hope it's a good one. And last but not least, Luna C Point saying, "Hey, gang, glad you can make it. Glad you're here. If you guys have any questions about the topics we're talking about tonight, or you want to ask any questions of your own, please throw them in the chat. Happy to cover them. Happy to beat them up and give you what hope you feel is a good answer." Oh, sneaking in here. This always happens. Chad Donnerschwanz, hello, fellow base crypto bros. Good to see you, my man. Good to see you.
So consistent.
Always consistent. Him and Centurion. Jemmy's also consistent. So is Luna. That's the core homies right there, undeniably. So, speaking of the macro markets, we do have a bit of an announcement. We have an oracle of some sorts who made a prediction recently. That's right, folks. Jim Cramer said that there will not be a recession. Does this inspire confidence?
Jim Cramer has a very high hit rate. So I wouldn't put past him. But usually memes like this, I tend to just get a laugh at, and then I'm a technicals guy. But the guy has a high hit rate of being wrong. So we'll take a look at Q2's GDPs. The final number for Q1, we went negative 0.3%, quarter over quarter. So that's one. That's one, gang. Let's see what happens in Q2, because Donald Trump already kind of tossed it up last week. He was like, "This is Biden's stock market. The next one is also the next few months is also as a result of his administration." I'm like, okay, buddy. Like,
classic blame game, if you will.
Exactly. Like, there's your preamble. So we're waiting for Q2. If Q2 is negative, then reverse Jim Cramer is right once again.
Yeah, well, that's just the basic tee up to this guy right here, which comes to us from CME Group, the FedWatch tool. So looking at the 7th of May Fed meeting, it looks like we have a 97.3% chance of no cut. But what's interesting for me is that we've actually had a change since the last time we showed this on the show, I believe. And that is for June. So the June meeting, once it loads, last time we were talking about this, there was a higher probability of a rate cut in June, but now we're actually seeing the opposite effect. It is transitioned now, and it is more likely that we will not get a rate cut in June.
Oh my goodness. Well, their selling may go away.
There you go.
That is gonna hurt a lot of people, man.
It could, but at the same time, I think that this right here might be one of the possible reasons why Jim Cramer might get one right finally, which is that if we have less rate cuts, that should be a sign that it should be a stronger economy, and we don't need the rate cuts to make the cost of borrowing money cheaper. So that's a possible read there. What's your guys' take on this?
Let us not forget what the 7th of May 25th chart did the past 33 days. During Liberation Day, during the fallout from that, the tariff announcements, I think we peaked at 55% chance of a cut for May at the highest. I mean, it got crazy. And so what watch that thing move, right? When Jerome Powell goes up for the meeting in May, make no mistake, the June chart will not stay like it is. I don't know which way it'll go, but
Yeah.
it won't stay like it is.
Yeah.
That's for sure.
That is 100%. We have spoken about this time and time again. We do not take bets on what's going to happen the next meeting until about a week out, because like Dace just alluded to, there was a lot of hyper speculation about us getting a rate cut in May, and then a week prior to the meeting, well, guess where the numbers sit. All right, there's betting on what's going to happen at the FOMC a month out. I would say even as great as like 2 weeks out is a loser's game. Do not do it. You will lose all your money.
Yeah, look at that big spike, all your blue spikes in the orange, right? That's what
Exactly. So for the folks at home, what we have pulled up here, this is a stacked area chart of the probabilities of each of the rate cuts or rate probabilities. So the large area, for any horizontal line you draw, the more area of a single color you have, the higher probability that it has. So Dace is alluding to these very large spikes in the blue here. The blue is the probability of a rate cut. As you can see, back in 2024, even we had we had a good chance of getting rate cuts, but we never got there. Even coming through March, we had all the way up to what's this guy? 90% chance of no cut, and then about a month later, or a 47% chance of no cut. And then back up to about 89, back down to 55, and now we're all the way back up to 97. So to Jay's point, he's entirely right there. The further out your time span on this is, the more it can swing in either direction. And there's a lot of macro events that have affected this chart in particular along the way, whether it's all the tariff stuff, or you can even see this giant area over here where we had a bunch of different colors going on. That was actually when we had the carry trade in 2024 disappear. And there was all those emergent calls for, we need Jerome Powell to do an emergency rate cut. And you can see that we got all the way down to a probability of getting what was effectively a 2% cut, not a 0.25% cut, which was what we're betting on for the next 2, possibly 3 meetings here, but a 2% cut. So yeah, the charts swing wildly. The data we have from FOMC group here is actually based on the Treasury bills futures markets. So it's people with actual skin in the game making moves as we see it in real time. But to Jay's point, 2 weeks out is realistically some of the better data you're going to get. Outside of that, it's just some long-term forecasting.
Yeah. Hey, Z, could I bring up my screen share really quickly just to kind of give the folks at home a positive spin to this? So let me go ahead and zoom in a little bit here. So the topic that we're currently discussing, is the probabilities of us heading into a recession. So we spoke about GDP that came in negative quarter over quarter for Q1 of 2025. However, the recent data that we have been going over and that we've been receiving from both inflation readings and the labor market indicate that, one, the labor market is holding pretty stable. We just got the ISM Services Purchasing Manufacturers Index today, and that came in positive. And they were expecting a contraction. That came in positive, which means the labor market in this regard is actually expanding slightly. We got unemployment numbers last week that held steady. So the labor market is either neutral to positive. We got major CPI numbers for the month of April that were extremely positive. So inflation is headed towards exactly where Jerome Powell wants it to go. And so at least for the May meeting, I think Jerome Powell is going to have a fairly positive outlook based on the last few months of data that we got. And unless the labor market just goes into a giga contraction heading into the June meeting, right, which will finalize the numbers for Q2, right, because April, May, June, then I think it's a bit too early to call recession based on the fairly positive April data that we got and the March data that we got. So
Jay, I've been so busy today, I didn't realize. I knew that this number came out, but I haven't even looked at it till just now. 51.6 is a large. I mean, that's a lot higher than the forecast.
Yep, forecast was 50.3. They were forecasting a slight contraction.
But Jay, for Jerome Powell to take action on rate cuts, what needs to happen for him to be able to want to take the rate cuts? Because doesn't things have to get worse for him to take action, or is that not the case? Is it not that simple?
So I know. So the blanket statement is something has to break, and the key thing that we've been taking a look at and paying attention to over the last few months was the long end of that yield curve. If it seems like it's pretty much stable, like that conversation. Well, so I'm gonna pull up the numbers here really quickly. So let's go ahead and check out. 10-year. Right. It seems like the 10-year. Here we go. 10-year treasury. There we go. 10-year treasury. Let's see if here we go. Okay. Let's see what's going on the 10-year. Let's condense this slightly. Well, 10-year is still elevated, right? A lot more elevated than what most people would want it to be. But this is the primary variable that we were paying attention to. Right? If the 10-year and the long end of the yield curve in general keeps skyrocketing, then Jerome Powell is going to have to step in and say, okay, I know we're slowing the runoff on our balance sheet, but if the long end keeps skyrocketing the way that it is, which is indicative of other nations dumping their U.S. treasuries, right, their U.S. security holdings, which is dumping the price of our bonds and our long-term securities, he's going to have to step in there and say, okay, I can't add to this problem. And by allowing the runoff to continue, he is by definition adding to the problem. And so if this thing gets worse and worse and worse over the next few months, he's going to have to step in there and say either one, put a hard stop to QT, which means the runoff stops. By definition, that is the end of quantitative tightening. And then we take it from there. Whether he starts QE immediately, I don't think he's going to do that. I think he's going to put a hard stop to QT. The FOMC participants are probably going to revise and become more aggressive with the amount of cuts that they're going to have to do. Right? That's what I am observing. Obviously, something else can happen that just completely break everything, and then he has to act regardless. But the big ticket item that I'm paying attention to personally is the long end, right? Because the long end is being affected by other countries dumping our securities. And one of the main things that the Fed has control over is their own personal security holdings. So that's what I'm paying attention to personally.
When's
That's very
Powell's
true.
term over? Does anybody remember? I want to say 26 at some point. I don't know.
I think 26 is the answer.
Yeah, Q2 2026.
Cracker, to answer your question and break it down for the folks at home a little bit, there's the dual mandate, which you're going to hear Jerome Powell talk about nonstop, which is stable prices, full employment. What he's referring to there is the inflation rate and the unemployment rate. If the inflation rate looks like it's starting to skyrocket a little bit, then you can increase interest rate to reduce the amount of borrowing of money, which will hopefully slow down that inflation rate a little bit. And then on the flip side, if the unemployment rate rises a little more rapidly than you'd like, then you can also decrease the interest rate. That will incentivize people to borrow money, start businesses, make investments, that kind of thing, as a way to incentivize the job growth. You're also going to hear him talk about another thing, which is called R star. That is the neutral rate. That is the theoretical rate at which the Federal Reserve can hold the interest rate at any given point to establish the perfect middle ground between quantitative tightening and quantitative easing. So when you're looking at statements like he's made in the past, which is that they're still looking at 2 interest rate cuts for this year, what they're predicting there is that the neutral rate or the R star rate is going to go down, meaning that they don't want to affect the market in a way that's going to push to either cause it to contract or overexpand at a hyperinflated rate. So that's the kind of stuff we're looking at there. But it really goes back to that dual mandate, which is that he's really trying to keep inflation down and keep full employment or unemployment low is the other way of saying that part.
Right. And the 10-year drives everything. The 10-year feeds into every type of car loan, mortgage, any type of government lending. Everything is stemmed on that, including the amount of debt that these countries hold in US dollars. So I still go back to what I'm saying, that they could use that to still use as leverage during these negotiations. So it's a huge incentive for these other countries to get in line with whatever these tariff negotiations are, because that's another play the U.S. government can play on this, is that, hey, if we can do this, we can cut the rates. So this is why Trump is trying to basically put, I'm not figuratively, but put the gun to Jerome Powell's head and say, you need to take action and cut these damn rates already, man. So I can get down to business and renegotiate our debt that's on our balance sheets with these countries and make better trade agreements.
Yeah.
So it's almost like if things aren't going to happen, and I feel like, Trump's going to step in and say, okay, if you're not going to do it, I'm going to force your hand, because he can get more aggressive and he can break the damn thing. He can cause all types of problems to happen if Trump doesn't want to take action on it.
Yeah. The federal government does not like it when the price of U.S. treasuries crash. Like, they don't like it when the price of the bond market crash. They do not like it. Right. So
there is a potential extra factor going on in the next few months, which is that the U.S. is going to have to refinance a lot of debt. The interest rate that we pay on that debt is actually set by the United States. So it's a bit outside of the dual mandate kind of side of the house. But what we're talking about is that if Jerome Powell can maybe even temporarily get that interest rate just down like a little bit, it means that the interest the U.S. is going to pay on that debt will be substantially less moving into the future. But that's a little out there, but it is a factor right now because that event is coming up on the timeline.
Yeah.
All right. Well, we got one more article that I want to hit before we start winding down a little bit. And that is the Grayscale Bitcoin Trust. Apparently, it's still dominating ETF revenue in 2025, despite having to compete with the likes of BlackRock and even Michael Saylor on an individual level. I'm pretty sure that guy just bought over 1,000 Bitcoin recently, and even at the higher prices now. So what we're looking at here is in the annals of financial history, few institutions have faced the tempest of competition with the steadfast resolve of the Grayscale Bitcoin Trust. Born in 2013 as a private placement, they pioneered regulated Bitcoin investment, granting investors access to Bitcoin's meteoric rise without the perils of digital wallets or unregulated exchanges. Their financial resilience shines, generating $268.5 million in annual revenue, surpassing the $211 million of all other U.S. spot Bitcoin ETFs combined, despite losing half of its holdings with $18 billion in outflows since early 2024. So what I'm seeing here is that Grayscale might not be the largest when it comes to pure size. They're kind of neck and neck with a bunch of other ETFs. But what they are doing is they're generating the most revenue through their ETF. What that tells me is that there's a lot of activity going on there. Do you guys think that there might be a specific reason for this one as opposed to, say, financial institutions like BlackRock?
I think it's just about the maturity. Grayscale is one of the oldest players in the game, and they have a significant amount of Bitcoin primarily, right? In terms of their balance sheet. I'm taking a look at Arkham right now, and before the massive sell-off, right? Here we go. Let me go ahead and share this really quick, Zenith, so people have a visual at home. So if you don't already have Arkham added to your bookmarks, it's a great way to take a look at big players in the game as far as their own activities and token holdings. So let me go ahead and bring this up. Can I maximize this and make it a bigger screen? I guess I cannot. Let me see if I can zoom in here. Please bear with me, folks. Here we go. And then I'm going to move. Can I move? I cannot. Oh, geez. Why can't I blow it up? Oh, that's okay. Well, so take a look at this, right? So at 2021, their token balances, we're just taking a look at Bitcoin. Grayscale held close to just a little bit over 500,000 Bitcoin. And you see the downward sloping trend line. And when it started to fall off precipitously, guess when that happened? When the Bitcoin ETFs went live. And suddenly people started rotating their Bitcoin holdings out of Grayscale. So even when their token balances giganuked, they are still currently standing at about 300,000 Bitcoin in their holdings. And so they've had a lot of assets to go through, which is probably why, in terms of volume, in terms of their fees generated, Grayscale is still leading the pack because they had a significant amount of balance of assets to begin with. And they also were one of the bigger names that were well known in the space that people played in when it comes to having an alternative, right? Because they had the GBTC, the Grayscale Bitcoin. They're one of the few entities in the space that had an alternative to holding spot Bitcoin. I'm sure Tracker can speak on this because I know he had Grayscale Bitcoin, he had Grayscale Ethereum, and it took advantage of some of those premiums. Yeah. And so just being first in the game and the fact that you had a large token balance to begin with, I think that's one of the main reasons why Grayscale has still remained at the head of the pack, even though there's been significant outflows. I mean, at their height of 2021, they went from 657,000 Bitcoin, and now they're sitting just slightly under it. So they lost more than 50% of their holdings, right? But going from 624,000 Bitcoin to 300,000, you're still top 3 in terms of holdings. I mean, how much does let's take a look at how much BlackRock has. Let's take a look at the holdings for BlackRock. So Grayscale is sitting just underneath 300,000 Bitcoin. Let's take a look at how much Bitcoin BlackRock has. Obviously, they've been accumulating. BlackRock is sitting currently at where Grayscale used to be, 607,000 Bitcoin. Let's take a look at MicroStrategy. Previously MicroStrategy. Let's take a look at their balance history. Right. So, and then MicroStrategy is sitting just slightly above Grayscale at 330,000 Bitcoin. So they're still within the top 5 companies that hold Bitcoin in their balance sheets in terms of just absolute number of Bitcoin that they hold. So that's probably why they're one of the most well-known. They're the most mature. They have a lot of investors that have been playing in that space for a considerable period of time. So it makes sense to me.
So the reason that I brought up this article is because I want to pose the question to you guys. I mentioned it earlier in the show. Do you believe this is largely an ETF-driven cycle? But there's two sides of that coin. One side is the large traditional finance investment side, and the other side is retail investors. I think the Grayscale ETF is the story of the retail investor. As we saw with the chart you pulled up, a lot of people were trying to get in early on the Grayscale Bitcoin ETF for a long time before it actually became spot. Now that we've seen those outflows, it shows me that people are actually taking some profits on that. So yes. What we're seeing is that BlackRock may have a lot of Bitcoin, but they're not selling, and we're not getting as much retail investor action on that side of the house. When it comes to Grayscale, we are getting that retail investor side of the house being more active, and that's where we're getting the generation of fees coming from. Because remember, Grayscale alone, their fee, the revenue from the fees was larger than all of the other ETFs combined.
Yeah. And also remember, Grayscale had the highest fee structure. I'm not sure if they still maintain the same fee structure, but they had the highest amount of fee structure. And why wouldn't you, right? If people were taking advantage of the GBTC premium and you were buying Bitcoin, spot Bitcoin came down as low as about 15,000, but the GBTC premium, you probably got like an extra 50% discount. So it doesn't matter if Grayscale had the highest fee structure. If you were buying Bitcoin at like around $12,000 GBTC, and now suddenly you have the liquidity to rotate some of that position out into fiat, into other assets, why wouldn't you take it?
Yeah, you guys are right about that. So I can speak for my personal, because I was in it I got into a lot of that in Q3 and Q4 of 2022. I got into them, and that was before Armageddon was setting in. And I was searching for what are the best ETFs out there, right? What are the best ETFs out there that can give me exposure in traditional markets, like your 401k, traditional brokerage accounts, your retirement funds, right? And there was nothing out there, nothing. I mean, I would say 80% to even maybe 90% of the ETFs, and I've spoken about this before, but a lot of the ETFs out there that were claiming to be crypto ETFs were holding treasuries and bonds. And I'm like, how the hell's that crypto? So when you start diving into it even deeper, most of the platforms that I was looking on would have maybe a couple ETFs, and of them, you'd had to be careful because they didn't necessarily track the asset very well. Unlike that, Grayscale, though, is interesting. A lot of times the price would hold up better than the actual underlying asset, which was surprising at times. So I just watched how it mirrored the price action, and it held up really well, or at least it traded with it. It didn't have these weird days where it dropped all of a sudden and the asset didn't drop, which they have other products here. I'm not going to name them, but they have other products that don't follow the asset at all. And then they had the most marketing out there. They had the most tools out there. Hell, 2-3 years ago, they had the ETF where you could buy a basket of ETFs. That was the BITW, I think, holding, or one of the ETFs there that holds so it was the top 10 market cap coins that you could have. So it was already diversified for you. And then when the Bitcoin did get released and the spot came out, that was a short-term top, but then it was very short-lived. It kind of kept on going after that, which was the more surprising thing. And then same thing with ETH, it held up well. So I would just say their products were just really good products. They were first to the market, they dominated the market, and then on top of that, their actual ETFs tracked the underlying assets probably the most, and they had the most exposure probably in the retirement funds that people could leverage. So I think it was those combinations that got them the most exposure.
Yeah. And if you're first in line and you are the pioneer, you get to charge a high fee structure.
That's true. We
Well,
definitely.
you're
saw it
taking
with
the
Grayscale.
think about it, you're taking the risk. You're taking a huge risk. So yeah, I would take it too.
There you go. All right, gentlemen. I think it is about time we move towards our special announcement. We teased it at the beginning, but now it's time to tell you all about it now. So we mentioned that there may be a way to get more content, better content, and also more access to us on even a daily basis. So, Mr. Dace Northall, what do we have going on?
Yes, sir. You're absolutely right. So we've launched a new membership product here at Walk the Block. Your $25 a month subscription gives you private mentorship. It gets you Q&As with myself and other members of the team. Private members only Telegram conversation that you can participate in and actively ask us questions, post what you like, see things you find interesting, bring up the latest scam coin you came across. Whatever it is that you want to bring up, you can bring it up in there. Routine exclusive live streams, and also on an emergency basis when the news calls for us to update you guys and gals. And so regardless of your existing knowledge base, if you want to learn more, come join and go from beginner to intermediate to expert with us. We would love to have you there. Z's right here's got the website pulled up. I believe it's walktheblockndf.com/membership-plans. If somebody will drop the link in the comments, link will also be in the comments. So that's our big announcement. Thank you guys for sticking around. We hope to see you guys in there. Yeah, that's what we have to say.
Yeah,
absolutely. We are continuing to build out an excellent backlog of very informative content to help people go from all those levels that Dace just mentioned. Whether you're new, whether you're experienced, we're trying to grab everybody, pull us all together, and get the meeting of the minds so that we can all work and improve together. We are not going anywhere on YouTube. We're going to be sticking around doing the Monday show free for everybody as always. We want to keep putting out great content here. And then if you want even more, this is where we're offering it.
Yep.
Excellent. All right, gentlemen, let's go ahead and move to close. Mr. Agent J, final thoughts. Where can the folks find you? What do you got going on?
You can find me on Instagram at agent_J Schroth, on X at _P90Hex, but you could find me most active in the Telegram channel for DGen Roundtable. And then obviously, if you decide to become a paid subscriber to our products, you're going to find a lot of the content that I produce there as well. It's a place where you're going to be able to get one-on-one access, priority access to myself and to the rest of the gang here. So if you like the content that we produce on a daily, on a weekly basis, that's where you're going to get more of. Like Zenith said, that doesn't mean that we're going to just disappear off of YouTube or disappear from DGen Roundtable, right? That's not what's going to happen. We're still going to produce the content that you like to see from us on a day-to-day, week-to-week basis. We're just going to produce a lot more of it in the membership section of Walk the Block. So you could find me there. You could find me on the Telegram, as always, 7:45 a.m. morning streams, MST. And aside from that, I think we have... Let's see. We have a Whiskey Wednesday. I'm not sure if we have a guest, but definitely we're going to have a show on Wednesday and then book club on Friday. Z, can you let the folks know what book we're covering on Friday book club?
For sure. This Friday, we're being hosted by our buddy Will Stevenson. We're covering Chasing Daylight.
Wonderful. And aside from that, thank you everybody for joining us on this wonderful Monday evening. We know that time is your most valuable asset, so we do appreciate that you spend some of that time here with us. So like the damn video, comment, subscribe. I would say scan the QR code, but we don't have a QR code yet. Until next time, Days.
Scan it next week. Scan it next week. Yeah, you can find me at Days Northall on X and on Instagram. You'll find me in the Telegrams and the Degen Roundtable and in our new members only Walk the Block Telegram on all those live calls.
Love to hear it. All right, Tracker, where can they find you?
Same place, man. They can find me in the same places as well. I'll say is this, $25. Good luck finding any type of value to that level that we're trying to do here. I think we're building a really white glove service to try to really help a lot of people. Yes, it's a business. Yes, we are trying to capitalize on that, of course, but at the same time, by giving such a low price, we're trying to reward the people who have been with us since the beginning here, because if we start to get enough members, who knows, it may go up over time. Just saying. So I wanted to kind of tip our hats to the people who have been helping support us. Greatly appreciate that. And by us launching this, it's going to help us also give more attention and time to things that need to be focused on here. And that is helping our customers to become better and honestly make them strong enough to challenge us to make us better. So look forward to it.
There you go. Love to hear it. Folks, you can find me on Instagram and X at ZenithDI. Be sure to tune in to the Hex Cuatro Cinco Conference Day 2 tomorrow over on the RH Max channel. Always love to give the boys a shout out over there when they're doing good work. Outside of that, though, yeah, this is it. We hope to see you guys tomorrow for the market open stream. But outside of that, thank you so much for joining us tonight. We know that time is your most valuable asset. We want to thank you every time you come spend it with us. And we hope that you tune in next week when we're breaking down the Federal Reserve press conference to see if the stormy seas got a little more stormy. Until then, we're going to continue to navigate digital finance all together. But let's close out the show for now, and we will see you guys next week. Ladies and gentlemen, thank you so much. Good night.